Look, I need you to understand something that's happening right now, something that most people won't see until it's too late. The dollar isn't just weakening, it's not just declining. We're watching the final stage of something that's been building for decades, and the signs are everywhere if you know where to look. Let me paint you a picture of what's actually happening behind the scenes. In the first half of this year, the dollar fell over 10%. That might not sound catastrophic until you realize this was the worst 6-month performance in over 50 years. 50 years. Think about that. We're talking about a decline that hasn't been seen since the early 70s, right around the time Nixon took us off the gold standard. History doesn't repeat, but it sure does rhyme. But here's where it gets interesting. While the dollar was collapsing, something else was happening. Central banks around the world were buying gold at a pace we've never seen before. Not just buying it, hoarding it. The People's Bank of China, the Reserve Bank of India, the Central Bank of Turkey, they're all accumulating physical gold like their currencies depend on it, because they do. You see, when central banks buy gold, they're not speculating. They're not trying to make a quick profit. They're preparing. They're building a foundation for what comes next. And what comes next is a world where the dollar isn't the reserve currency anymore. Now, I know what you're thinking. The dollar has been the world's reserve currency since World War II. It's backed by the full faith and credit of the United States government. It's the most liquid, most trusted currency on the planet. How could it possibly collapse? Let me tell you a story. In the late 60s, the French finance minister noticed something strange. The United States was printing dollars to fund the Vietnam War and domestic spending programs, but those dollars were supposed to be backed by gold at $35 an ounce. France started doing the math. They realized there wasn't enough gold in Fort Knox to back all the dollars in circulation. So they did something bold. They started converting their dollars into gold, demanding physical delivery. Other countries noticed. They started doing the same thing. And on August 15, 1971, President Nixon went on television and announced that the United States would no longer convert dollars to gold. Just like that, the gold standard was dead. The dollar became a fiat currency, backed by nothing but trust and the promise of future taxation. For a while, it worked. The petrodollar system emerged. Oil-producing nations agreed to sell oil only in dollars, creating artificial demand for the currency. If you wanted to buy oil, you needed dollars. Simple. Brilliant. And it kept the dollar strong for decades. But that system is crumbling right now in real time. Saudi Arabia, the cornerstone of the petrodollar agreement, is now accepting yuan for oil sales to China. Russia is selling oil and gas in rubles and yuan. The BRICS nations, Brazil, Russia, India, China, South Africa, they're actively working on alternative payment systems that bypass the dollar entirely. Think about what this means. For decades, countries needed to hold massive reserves of dollars to buy oil and conduct international trade. Those dollars were invested in U.S. Treasury bonds, keeping interest rates low and funding American debt. But if countries don't need dollars anymore, what happens to all those Treasury bonds? Who's going to buy America's debt? The Federal Reserve, that's who. They'll print more dollars to buy the bonds that foreign countries are selling. And when you print money to buy your own debt, you're not creating wealth. You're destroying the value of your currency. It's a death spiral, and we're in it right now. Let me show you something else that's happening. The COMEX, the commodities exchange where gold and silver futures are traded, has a problem. For every ounce of physical gold in their vaults, there are dozens of paper claims. It's like a bank that's issued 50 times more deposit receipts than they have actual money in the vault. As long as everyone doesn't ask for their gold at the same time, the system works. But what happens when they do? We're starting to see the cracks. Delivery delays, premium spikes on physical metal, shortages at major dealers. The paper price of gold, what you see on the charts, is being suppressed by massive short positions from commercial banks. But the physical market is telling a different story. Physical gold is trading at premiums to the paper price. That's not supposed to happen. It means the paper market is losing credibility. Here's where it gets really interesting. The London Bullion Market Association, the LBMA, they're the ones who set the global gold price twice a day. But recently there have been reports of allocated gold. Gold that's supposed to be sitting in specific bars with specific serial numbers and specific vaults, being double or triple allocated, the same bars claimed by multiple owners. When this comes to light, and it will, the scramble for physical gold is going to be unlike anything we've seen. Now, I want to talk about something that affects you directly. Your retirement accounts, your savings, the wealth you've spent decades building. It's all denominated in dollars. And if the dollar is entering its final stage, what does that mean for your purchasing power? Let me give you a real example. In 1971, when Nixon closed the gold window, gold was $35 an ounce. A new car cost about $3,000. You could buy a car with about 85 ounces of gold. Today, gold is over $2,000 an ounce. A new car costs $40,000. You can still buy a car with about 20 ounces of gold. Gold maintained its purchasing power. The dollar lost over 95% of its value. That's what inflation really is. It's not prices going up. It's the value of your currency going down. And when a currency enters its final stage, inflation doesn't just tick up a few percentage points. It accelerates. It compounds. It destroys wealth faster than most people can comprehend. Quick aside here, if you're sitting on $100,000 or more in retirement accounts, I put together a free guide on how gold IRAs work. It's in the description. Covers how to get physical gold into your retirement account without tax penalties, how the process works, what the rules are. Worth checking out if that's relevant to your situation. Anyway, back to what's happening right now. The Federal Reserve is in an impossible position. They've painted themselves into a corner. If they raise interest rates to defend the dollar and fight inflation, they'll crash the economy and make the national debt unsustainable. The interest payments alone would consume the entire federal budget. But if they keep rates low and keep printing money, they'll destroy the currency. So what are they going to do? They're going to choose the path of least resistance. They're going to keep rates lower than inflation. They're going to keep printing. They're going to sacrifice the dollar to avoid immediate economic collapse. It's not a conspiracy. It's just math. And the math doesn't work anymore. Let me tell you about what happened in Weimar Germany. After World War I, Germany had massive war debts. The government started printing money to pay those debts. At first, it was manageable. A little inflation, nothing too serious. But then it accelerated. Prices started doubling every few days, then every few hours. People would rush to spend their paychecks the moment they got them, because by the next day, that money would be worthless. Workers demanded to be paid twice a day, so they could buy food before prices doubled again. There's a famous story of a woman who left a wheelbarrow full of cash outside a store while she went inside to shop. When she came out, the wheelbarrow was gone. The thief had dumped the money in the street and stolen the wheelbarrow. The wheelbarrow was worth more than the cash. Now, I'm not saying we're going to see Weimar-level hyperinflation tomorrow, but I am saying the mechanisms are in place. The debt is unsustainable. The printing is accelerating. The trust in the currency is eroding, and once trust is lost, it's almost impossible to get back. Here's something most people don't understand about currency collapse. It doesn't happen all at once. It happens in stages. First, you get the denial stage. Everything is fine. The economy is strong. Inflation is transitory. We're in control. That's where we were a few years ago. Then you get the awareness stage. People start noticing prices going up. They start questioning the official inflation numbers. They start looking for alternatives. That's where we are now. People are buying gold, buying silver, buying Bitcoin, buying real estate, anything to get out of cash. Next comes the panic stage. That's when the general public realizes what's happening. That's when everyone tries to get out of the currency at the same time. That's when you see bank runs, capital controls, restrictions on gold purchases, restrictions on foreign currency transactions. The government starts getting desperate. And finally, you get the reset stage. The old currency is abandoned. A new currency is introduced, usually at a massive devaluation. Savings are wiped out. Pensions are destroyed. The middle class is devastated. And the people who saw it coming, the people who protected themselves with hard assets, they're the ones who survive with their wealth intact. We're somewhere between the awareness stage and the panic stage right now. The smart money, the institutional investors, the family offices, the sovereign wealth funds, they're already moving. They're buying gold. They're buying silver. They're buying productive assets. They're getting out of paper. But here's the thing. When the panic stage hits, it's going to be too late. The premiums on physical gold and silver are going to explode. Dealers are going to run out of inventory. Delivery times are going to stretch from weeks to months. The government might even restrict purchases or impose windfall taxes. You need to position yourself before the crowd realizes what's happening. Let me give you another historical example. In 2008, during the financial crisis, gold was around $800 an ounce. People were scared. The banks were collapsing. The government was bailing out Wall Street. And gold started climbing. By 2011, it hit $1,900 an ounce. That's a 137% gain in 3 years. But here's what's different now. In 2008, the problem was private debt. Banks had made bad loans. The solution was to bail out the banks and recapitalize the system. It worked, sort of. The economy recovered, slowly. Today, the problem is sovereign debt, government debt. And you can't bail out the government. There's no one big enough to do it. The only solution is to print money and inflate away the debt. And that means destroying the currency. The numbers are staggering. The U.S. national debt is over $35 trillion. That's trillion with a T. The interest payments alone are over $1 trillion a year now. That's more than the defense budget, more than Medicare. It's unsustainable. And it's not just the United States. Japan's debt to GDP ratio is over 250%. Europe is drowning in debt. China has a massive real estate bubble that's starting to pop. The entire global financial system is built on debt that can never be repaid. So, what's the end game? How does this play out? There are really only a few scenarios. 1. Governments default on their debt. That would crash the global financial system overnight. Not going to happen. They'll do anything to avoid that. 2. Governments raise taxes massively and cut spending to pay down the debt. That would cause a depression and political upheaval. Also not going to happen. Politicians won't commit career suicide. 3. Governments inflate away the debt by printing money. This is what's going to happen. It's the path of least resistance. It's politically palatable because most people don't understand it. And it's already happening. When you inflate away debt, you're essentially stealing from savers and creditors. If you owe $1 million and you print enough money to cut the value of the dollar in half, you now effectively owe $500,000 in real terms. Your debt burden is cut in half, but so is everyone's savings. This is why gold matters. Gold can't be printed, gold can't be inflated away. Gold has been money for 5,000 years because it has properties that make it ideal for storing value. It's scarce, it's durable, it's divisible, it's recognizable. And most importantly, no government can create it out of thin air. Throughout history, every time a government has tried to debase its currency, gold has preserved wealth. In Rome, when emperors started clipping coins and reducing the silver content, gold maintained its value. In revolutionary France, when the assignat currency collapsed, gold maintained its value. In Weimar Germany, in Zimbabwe, in Venezuela, in every currency crisis throughout history, gold has been the constant. And right now, we're seeing the same pattern play out. As the dollar weakens, gold is strengthening. As trust in fiat currencies erodes, gold is being accumulated. As the global financial system becomes more unstable, gold is being recognized as the ultimate safe haven. But here's what most people miss. The price of gold isn't really going up. The value of the dollar is going down. Gold is just maintaining its purchasing power, like it always has. When you see gold hit new all-time highs, what you're really seeing is the dollar hitting new all-time lows. And we're just getting started. The forces that are driving gold higher, the debt, the money printing, the loss of confidence in fiat currencies, these forces are accelerating. They're not going away, they're getting worse. Think about what happens when the general public figures this out. Right now, gold ownership in the United States is around 2% of financial assets. 2%. In the 1980s, it was over 20%. If we just get back to historical averages, that's a tenfold increase in demand. And we're not talking about a market where supply can easily increase. Gold production is actually declining. The easy gold has been mined. New discoveries are rare. It takes years to bring a new mine into production. So you've got declining supply and potentially explosive demand. That's a recipe for a price move that's going to shock people. We're not talking about gold going up 20 or 30%. We're talking about a potential move that could take gold to 5,000, 10,000, maybe higher. And silver. Silver is even more interesting. Silver has all the monetary properties of gold, but it's also an industrial metal. It's used in solar panels, in electronics, in electric vehicles, in medical applications. Demand is surging from both the monetary side and the industrial side, but silver production is constrained. Most silver comes as a byproduct of copper and zinc mining. You can't just ramp up silver production quickly. The gold-to-silver ratio, the number of ounces of silver it takes to buy 1 ounce of gold, is currently around 80 to 1. Historically, it's been closer to 15 to 1. If that ratio reverts to the mean, silver could outperform gold by 5 times or more. That's the kind of move that creates generational wealth. But you have to position yourself before it happens. Once the move starts, once the panic stage hits, it's going to be too late. The premiums are going to be astronomical. The availability is going to be limited. You'll be competing with millions of other people who suddenly realized what's happening. This is not about speculation. This is not about trying to time the market or make a quick profit. This is about protecting yourself from what's coming. This is about preserving your wealth through a currency transition that's going to devastate people who aren't prepared. Think about your retirement. Think about your savings. Think about the wealth you've spent your entire life building. What happens to it when the dollar loses another 50% of its value? What happens when inflation is running at 20 or 30% a year? What happens when your purchasing power is cut in half? The people who are going to survive this, the people who are going to thrive through this, are the people who understand what's happening and take action now. Not next month, not next year, now. Because the window is closing. We're in the final stage of the dollar. The signs are everywhere. The central banks know it. The institutional investors know it. The smart money knows it. The only question is, do you know it? And more importantly, are you going to do something about it? This isn't fear-mongering. This is reality. The math doesn't lie. The history doesn't lie. The patterns are clear. We've seen this play out dozens of times throughout history, and it always ends the same way. The currency collapses, the people who held paper wealth lose everything, and the people who held hard assets preserve their wealth. You have a choice to make. You can ignore this. You can hope it doesn't happen. You can trust that the government and the Federal Reserve will figure it out, or you can take responsibility for your own financial future. You can protect yourself. You can position yourself to not just survive what's coming, but to potentially profit from it. The final stage of the dollar is here. The question is, are you ready?